Hi, folks. Welcome to the Financial Argument. The Evergrande crisis came to the fore about a month ago and was widely discussed. Many of the analysis I've seen have compared the bankruptcy of Lehman Brothers to the bankruptcy of Evergrande. Although the players have changed in every period of history and the game has always been the same, the comparison is not very accurate. Why? Because the bankruptcy of Evergrande will create a more serious and systemic banking crash that will affect billions of people's lives. Also, the main event is not the bankruptcy of Evergrande, but the domino effect it'll create on the global markets. For example, Fidelity, UBS, HSBC, PIMCO, Blackrock, Allianz, and other players are connected to Evergrande. They're the top funds with the highest exposure to Evergrande bonds in the entire world. On the other hand, Evergrande is a giant company, even bigger than Alibaba. With 200,000 employees involved in everything from electric cars to food and beverage manufacturing, we know that Evergrande owes about 171 local banks and 121 other financial institutions. So when Evergrande collapses, banks and other lenders will also experience a liquidity crisis. There will be a series of waves of bankruptcies that will trickle down to even the smallest suppliers, even if they have little to do with Evergrande. In fact, Evergrande isn't the only real estate company in China to fail. The entire real estate market has been on icy ground for years, and everyone knows it. I don't have a magic ball, but the future is crystal clear. All future economic developments will actually be an accounting decision made by the authorities. The devastating damage wrought by the corrupt economic system will not leave the banks unscathed. They too will be brutally affected. Therefore, the bitter truth is that the public will pay for this loss as usual, folks. Even worse, those who are unprepared will suffer the most. Those who think the danger has passed and the Evergrande crisis will cool down and are gravely mistaken. With Evergrande Group's attempt to sell a major stake of their property services unit falling through, the crisis is spiraling out of control. I also believe that people are wrong to think that the Chinese government will somehow bail out Evergrande. Zhu Lan, a People's Bank of China official, recently broke the bank's silence on the fiasco and said the effects of the crisis are controllable and there's little likelihood of it spreading. Perhaps this damage control is working on some people who seem to believe that the worst is over. But we have to ask, folks, if this crisis is indeed controllable, who will really come out on top in the end? Please remember my previous videos and ask yourselves, what will stop China from carrying out its plans, which involve saving their own economy, even if it's at the expense of everyone else? The rest is just collateral damage. Perhaps this is all part of a greater global economic plan. We already know that certain forces in the global economy have been wanting a market correction for years. If China triggers this correction by lighting the flare, then the central banks, especially the Fed, can implement their own economic operations in response to such an event. In this way, the illusory theater repeats itself again. At the end of the day, the few scapegoat banks and the people who helped inflate the market bubbles, despite the years of warnings, will fall into financial disaster. It's also clear that Xi Jinping's plan has long included bursting capital bubbles in China. First the tech giants and now the real estate industry. And let's remember how Jack Ma, as well as some other Chinese capital giants, suspiciously disappeared for months last year as this plan unfolded. Although it appears that what brought Evergrande to the point of financial crisis was unplanned growth and excessive borrowing, it was actually the Chinese government's 3 red lines decision that allowed Xi Jinping's plans to unfold. So, what is this 3 red lines decision? The Chinese government enacted a series of regulations in August last year for companies in the real estate sector. These include a 100% cap on net debt to equity, cash to short-term borrowing ratio of at least 1, and a 70% limit on assets to assets, not including advance proceeds from projects sold on contract. These regulations created a ripple effect that ignited the crisis in the sector because only 3 of the many real estate companies in China met these criteria. Companies that do not meet the criteria are prohibited from obtaining loans from banks. This was the beginning of the end for Evergrande. The company's cash flow has deteriorated so much that it's reported that it will not be able to make the loan interest payments it has to pay to the banks to avoid default. However, it was announced on October 21st that Evergrande made an $83.5 million interest payment right before the end of the 30-day grace period, which will temporarily keep them out of default. Despite their efforts, the writing is on the wall. Do you think that the Chinese government could not have foreseen that this problem would have such a big impact? I don't think so. Evergrande is not the only company that cannot meet these regulations. Kaisa Group became the first Chinese real estate company to default on dollar-denominated debt. A number of companies followed, including China Fortune Land, Macrolink, Yida China, Oceanwide Holdings, and Tahoe Group. However, the biggest company among them is Evergrande. These firms tried to sell their assets at very low prices to generate cash. In addition, another giant real estate company that shared the same fate as Evergrande last week was Fantasia Holdings. They missed their $206 million bond payment, according to Bloomberg. Another detail I want to show you is that if you look at the graph, you'll see that this collapse in the real estate market is not something that came out of nowhere. Greenland Holding, Central China Real Estate, Fantasia Holdings, Guangzhou, and Sinic Holdings, companies included in the chart, are also real estate companies such as Evergrande. We see that the stocks of all these companies have been in great decline since May, and most of them have lost half or more of their value. I'll share some more data to help you understand the size of the Chinese real estate market and to illustrate that it does not make much sense that the Chinese government could not foresee such a major crisis before announcing their regulations. It's up to you as to what you want to call their plan. Some might call it the Black Swan, but I prefer the term Red Swan. According to the latest data, the housing market represents 62% of the assets of all households in China. In the USA, this rate is at 23%. On the other hand, the value of the Chinese property market, including offices, residences, and commercial real estate, is $60 trillion, double that of the USA, which amounts to about $34 trillion. I would also like to point out that about $11 trillion worth of Chinese properties have not been sold yet. Assuming that the global GDP was $85 trillion in 2020 of last year, a volume of $60 trillion is a truly scary figure when evaluating risk. This chart also shows the debt ratios of households in China. The debt level, which was 10% in 2007, has risen to a staggering 62% today. The main reason for this was that the Chinese government pushed its citizens to borrow money in the real estate market, creating the largest property market presence waiting to collapse today. Another problem is that 1 out of every 5 houses built today is empty in China, which is a world record exceeding any other country. Looking at the general picture, there's been a decline across the board in the latest data, especially since the summer of this year. New GFA, or gross floor area, starts at minus 19%, under construction GFA at minus 22%, sold GFA at minus 12%, value sold at minus 13%, land area sold at minus 60%, and land value sold at minus 49%. Despite these decreases, we see a 27% increase in the number of completed constructions. In other words, ghost cities continuing to form. While the impending disaster was obvious, we're now starting to see it play out in real time with incredibly major developments. Reuters recently reported that Evergrande is expected to default after missing payments, according to an investment bank which advises some of its lenders. The Australian Central Bank, which conducts major mineral trade with China, recently issued a statement where they warned that if Evergrande collapsed, China and the entire world would face disaster. And finally, I also want to mention that those who believe that the stock markets have already felt the final effects from this situation and that there will not be a stock market crash in the near future are wrong. Recall the state of the stock market when the Lehman Brothers collapsed in 2008. When Lehman filed for bankruptcy, the stock markets did not suddenly crash. In fact, the stock market increased during the first month. Everything seemed normal for the stock market in the first month, but the crash happened at the end of a month. For some of you, the fall of the biggest domino in the Chinese real estate market may not make sense. Although the collapse of giant companies such as Fidelity, UBS, HSBC, PIMCO, Blackrock, Allianz may make some happy, at the end of the day, the public is who pays for the corrupt economic system. Please pay attention to my warnings, folks, especially if you are unprepared. Hold on tight to your physical gold and silver, and don't forget to prepare for the planned global food crisis, which I'll talk about in the next video. Gain some skills, stock up on water, food, ammunition, and whatever it takes. The system prevents us from working together as a society. I don't want to talk too much about politics, but this includes elections. This is why you should think and act individually for your family and loved ones. Remember, when they make you believe that you've experienced the worst of it, know that the worst is yet to come. Thank you for all your support on Patreon, your channel membership, and for keeping the financial argument alive. God bless you all.